Hi, and welcome to Learning Objective 9.2. Record to subsidiary ledgers and post to general ledger sales transactions and returns. Okay, a transaction on account for Arts Wholesale Clothing Company. Arts Wholesale Clothing Company, as a wholesaler, buys merchandise from suppliers and sells it to retailers, who in turn sell it to individual customers. The following transactions occur in April for Arts Wholesale Company. Okay, I'll let you read through those. And so then on the next page, we will journalize them. So sold on account merchandise to Hal's Clothing, $800. Okay, so here's a sales invoice for that first transaction. So again, sold account merchandise to Hal's Clothing, $800. So we have to record the sale. So we're increasing revenue. So we credited $800. And we're also increasing accounts receivable because Hal's Clothing owes us money. So we have an asset that we're increasing, so we're debiting. But we also have to do a journal entry for that inventory going out the door. So the inventory, which is an asset, is decreasing, so we're crediting it, and the cost is $600. And the cost of goods sold also is an expense that needs to increase $600. Now, where do we get that $600? I'm going to go back here, see if I saw it anywhere. And it really doesn't say what. It would have to tell you what the $600, what the cost of that equipment is. And I'm not seeing it anywhere, what the cost was. So we just have to assume that was given to us, okay? So the journal entry below, debit accounts receivable, credit sales, $800. Debit cost of goods sold, credit inventory for that cost of the inventory. Okay, accounts receivable subsidiary ledgers. This is a separate ledger than our normal ledger we have. It's a special ledger, contains a single type of account, subsidiary account for each customer. So we're going to have a subsidiary accounts receivable ledger. So just, you know how we have a ledger account and accounts receivable account. Now we're having a sub account for that accounts receivable ledger. So if we have $100,000 in accounts receivable, now we'll have a separate ledger that will agree to that $100,000, but will list like this customer owes us $20,000. This customer owes us $30,000. This customer owes us another amount. Okay, so it's just giving us more detail by customer. So it's usually arranged in alphabetical order. It can be put in the form of a file, notebook, or stored on a computer's hard drive or in the cloud. It's posted to the general ledger and recorded to the subsidiary ledger. Okay, so partial general ledger of Wholesale Clothing Company. So we have all these, this is our general ledger accounts that we have, but then we would have a control account, accounts receivable account here within our normal general ledger, right behind cash. But we would also have a subsidiary that would agree to that amount. So we would have one account for Row Company that would show the balance they owe us, Mel's Department to show how much they owe us, Hal's Clothing, and then Benva's Company. So you'd actually be recording it kind of twice so that you have that, detail of this account in your subsidiary ledger. Okay, the general ledger account is called the controlling account. It summarizes or controls the subsidiary ledger. The total of the individual accounts will equal the controlling account ending balance. Okay, so before posting and recording sales transactions, so here are all the different journal entries we'll have in our general ledger. But then you will also have where, well, I guess this all kind of goes together, where accounts receivable house clothing, accounts receivable Bevan's company. So you can see where the detail, is recorded here. Okay, so then you post them in your T accounts, where we'll have the controlling account here, and then we'll have separate ledgers or separate accounts for each one of those accounts receivables as well. Okay, so when a subsidiary ledger is updated, a check is placed in the posting reference column of the general ledger. So we have debit accounts receivable house clothing $800, credit sales $800. So you can see they put a check mark here because we debited accounts receivable for that $800 that came from general journal entry 2. And we also updated our subsidiary ledger for house clothing here. Okay. We also, updated sales, cost of goods sold, and inventory. And remember, in this posting reference account, you're putting the account number. So the cost of goods sold account down here is account number 510. So you move it up here. And then down here, you put a reference to General Journal page 2 is where it is. So it's General Journal page 2. Okay, so you just continue with that process for everything in your General Journal page 2. If it is an accounts receivable subsidiary, you have to record it to the subsidiary account as well as the accounts receivable account. So the sum of the subsidiary account has to equal the controlling account. Okay, the credit memo notification sent to a customer, indicates the amounts of goods returned or amount allowed for damaged goods. The amount is subtracted, credited from a customer's account. So if we got a credit memo, like the one pictured here below, merchandise returned 60 model 8B men's dress gloves, $600. So we would credit sales returns and allowances. We would debit accounts receivable, and we would debit inventory and credit cost of goods sold. So here's our journal entry for the credit memorandum. And then again, we have these posting references where this is recorded in the sales returns allowance account. This goes to the accounts receivable Bevan's account. So you put 113 because that is your accounts receivable account, and then you put a check mark when you record it to the subsidiary ledger for Bevan's account. Okay, we're increasing inventory because we're getting those gloves back in inventory, decreasing cost of goods sold. Okay, and that concludes this learning objective.